Hello and welcome everyone to another edition of the Richard Haynes Real Estate Show. I'm your host, Richard Haynes, here at Haynes Real Estate, where we cover the South Bay market here in Greater Los Angeles, from the beach cities of Manhattan Beach, Redondo Beach, Hermosa Beach, all the way to the Palos Verdes Peninsula, where we cover PVE, RHE, Rolling Hills, and Rancho Palos Verdes. Today is Wednesday, January 15th of the newly minted 2025, and unfortunately, we are recording this episode under a little bit more of a somber note. As many of you all know already, national news, Los Angeles has been affected by huge wildfires, namely the Palisades Fire and the Eaton Fires out by Altadena and Pasadena. I'd be remiss without saying that our hearts go out to everyone affected. This episode, we are going to make short and sweet and give you an update on what we are seeing here in the South Bay market, how that's impacting the rental market from so many displaced families, what we might see in the future, although I don't want to speculate. And then, of course, I want to cover on another huge topic, insurance. And so two big items that we'll cover here quickly, give you some quick information on how the fires are affecting our markets, and hopefully how you as a South Bay homeowner or prospective homeowner can protect yourself with the right insurance. So before I jump into the effects it's having on the market, I do want to start off talking about insurance. Now, I am not a registered or licensed insurance broker, but I do own a home here in the South Bay and income properties throughout Greater Los Angeles, and have helped clients work through their insurance policies. Of course, you'll always want to talk to an insurance professional who will break down an entire policy for you. But I'm here to offer advice that I've had from my perspective and how we try to protect ourselves here when it comes to fires. I'm going to actually reference a blog post. As many of you know, I write a weekly blog or twice monthly now as we've gotten busier over the years. But I'm pulling an old blog post that I wrote back in November 15th of 2018. So about 6 or 7 years ago. And I wrote this blog as a result of the Woolsey and Hill fires here in Southern California, along with the Camp Fire in Northern California, which were some of the most deadly and destructive fires up to that point. And I wrote a blog after interviewing my insurance broker, Chris Gatilla of Dibuto and Defendants Insurance Brokers. We still work together. He's a wealth of information. And of course, things change. So whether you call Chris or your preferred insurance broker, these are really important things you should weigh and consider to protect your real estate investments in the future. So I'm not going to get into the nuts and bolts of each policy and how a cash value works versus a replacement works, and if you can even get insurance if you're in a high fire area, but I'm talking about the details I discuss with Chris and make decisions so that you can talk in the same manner with your insurance broker and probably dive even deeper. But what I want to begin on the insurance conversation when it comes to fire and beyond is a lot of people will talk about hey, at least those homeowners have insurance, or what we hope you guys, of course, with some of these high fired areas, they at least were covered by someone. But while I suspect most people here in these fire affected areas did have insurance, it's not always as good as you might think it would be, because most standard insurance policies cover what we call replacement value. And so Two of the things I find, especially with people who aren't sophisticated and in the real estate business constantly, like agents or developers or investors, is that these insurance policies replace or cover you for replacement value. Now, what does that mean? Replacement value is to replace the home that's currently standing there. And I'm going to give you an example that's twofold. Number one, oftentimes your insurance broker asks you, what do you think are the costs of the replacement value of your home? And what I find that becomes an issue for many, many people is, one, they underbid the replacement value of what their home is actually going to cost. And furthermore, if you were using a replacement value before COVID and inflation, more than likely you're well below what inflated costs are to replace your framing and your roof, etc. So that's part one, is that potentially many homeowners may be underinsured on their replacement value. But what many people don't know with replacement value is, if you own, let's say, a post-war home built in the 1960s, and even though it's maybe been remodeled or updated over time, it doesn't have the bells and whistles that new construction would be required to have. Now, the initial feedback that we're hearing from the city of Los Angeles leadership is going, hey, we're going to fast track homes that are being rebuilt as is, and they won't have to comply with local building codes. Well, hey, what if just one home burns down in your neighborhood and that's you, or 10, and it doesn't get the national news or help that you may need? What you need to explore beyond just your standard homeowners insurance policy is a consideration of something that's either an add-on or an additional policy called ordinance and law supplemental insurance. And what does that mean? Here's what it means, is there are new laws required by the state or your city constantly coming forward that need to be added to new construction. So I'm going to give you some new items required by new construction homes that likely wouldn't be covered by your policy if you had to significantly rebuild your home. As many of you know, almost all new homes require fire sprinklers to be installed in your home. If you own a post-war home and never installed fire sprinklers during a remodel, that likely wouldn't be covered in your normal replacement value. There are new sewer laterals that need to be replaced and with updated codes. There are now water conservation plans required for your landscaping that wouldn't be covered in a normal replacement value. You have new Title 24 laws to make home insulation even better, and heating and cooling and energy efficiency that wouldn't just be part of your replacement value if you have a post-war home or something before Title 24 codes. Today, now, all new construction homes need to have solar panels installed. So if you had to install solar panels rebuilding your home, that wouldn't be covered in a standard replacement value policy. And of course, there's water efficiency fixtures, energy saving electrical, and new roofing requirements for a lot of homes throughout Southern California. So I want to encourage many of you to explore, as you're feeling the effects of these wildfires, is if you haven't been affected by the fires, you should explore your standard home insurance policy and make sure your replacement value is at the place where it meets inflated construction costs that we've seen over the years. And I urge you to consider ordinance and law insurance supplemental coverage in order to cover you for these new laws that you wouldn't be covered under a standard replacement value policy. And if it only costs you another $50 a month or $100 a month, or maybe now with the fires it could be more isn't offered, at least you're aware of it. You can plan for it, and you can make the decision if you want to pay that extra money to make sure that you are fully covered and can sleep at night. Another item I talked with Chris about back in 2018 was loss of use insurance as part of your policy. What many people don't realize is that when your home burns down or a neighborhood or a catastrophic event happens, you are displaced from your home as you're seeing the thousands upon thousands of people displaced from these fires. You need money for a place to live because while you can find forbearance on your mortgage in the home that you were displaced, you do need to pay for a short-term rental or a long-term rental. And loss of use insurance covers you for a certain amount of time. Now, again, I'm not an insurance expert, but in many cases, you will have loss of use and have expenses covered to be in another home. But many of these policies likely have a loss of use time frame that just isn't long enough or acceptable for how long it takes to rebuild homes after catastrophic events. Oftentimes, I like to talk to Chris, my insurance broker, and I ensure we have loss of use insurance. It used to be 12 months. Now I'm more comfortable with 24 months because of how long it takes to get a home out of the ground these days. And when you look at the Palisades and Eaton fires, when entire neighborhoods and communities are just decimated, it likely will be longer than 24 months as they rebuild infrastructure, clean out all the toxic items that have burned down before people can even start to plan for permits and rebuild their home. But if you are a one-off home or a few homes and the cleanup isn't as big, I typically opt for 24 months because that's what it takes people to submit, plan, and build homes normally in the South Bay. Of course, if you aren't efficient or doing incredible high-end finishes or details, it will take longer than 24 months. But I urge you to also look at your policy and understand your loss of use insurance. Some people go, hey, I've saved up money over 30 years. I could handle paying for a short-term rental. I don't need it. But if you find you'd like to have it or the extra payment is worth it to have peace of mind, I urge you to look into loss of use insurance. So you guys, obviously this insurance stuff doesn't help all of our friendly Angelenos that are in the Palisades, the Eaton fires, and beyond. But here in the South Bay, if I can be any sort of help, is please, number one, look at your replacement value costs. Give me a call to understand what it may cost in your neck of the woods. Speak to your general contractor and get your replacement value dialed in. Number two, you're going to want to look at ordinance and law so you don't get raked over the coals paying for hundreds of thousands of items that aren't a part of your policy that now you may be responsible for, like solar, Title 24, landscaping plans, upgraded type of windows, etc., and then loss of use insurance, you guys, where you get a like for like check to stay in another home that you're used to, hopefully for 24 months or beyond, so you have a place to stay free of charge as you rebuild your home. So hopefully that is valuable to you guys here in the South Bay as you start to re-explore and underwrite your insurance policies, if we can even get those here down the road. And then moving on to my second topic here is how these fires may impact the South Bay. Now, I don't want to speculate or spread rumors, so I'm not going to fully opine on what could happen here in our markets. I think a lot of you can assume what can happen, but what I can share is this. The demand for short-term rental housing and even long-term rental housing has been incredible here in the South Bay. For the time being, the demand has been mostly in Manhattan and Hermosa Beach because if you look at the socioeconomic status of many of the Palisades fire displaced homeowners, Manhattan Beach and Hermosa Beach, along with, of course, other coastal communities up in West LA, fit the lifestyle, the proximity to the coast, potentially proximity to work that these homeowners had based their life on and set in roots on the Palisades community. So the demand here, you guys, by the beach cities has been absolutely incredible. Speaking to other agents who have listings in Hermosa, Manhattan, El Segundo, they're getting dozens and dozens of applications from fire-affected renters or displaced residents looking to move to the South Bay. At the time being, I actually just rented a North Redondo townhome to a fire-displaced renting a group, and many early fire-displaced residents that we offered it to focused on Hermosa or Manhattan and declined it. We did ultimately find residents that did take it, but again, it's mainly focused in Hermosa and Manhattan Beach. But I do believe it's going to start moving to North Redondo, areas of Torrance, South Redondo, and the Palos Verdes Peninsula. Of course, we have heard huge demand for Airbnbs from Palm Springs to Orange County, all the way up to Santa Barbara and the Central Coast. So you guys, right now I can confirm the rental market is seeing significantly more demand than there is supply, but it is nice to see homeowners who have vacant houses or second homes have been working together with agents to try and meet that demand. Of course, we've seen price gouging here or there, and of course, $10+ million in Manhattan Beach asking $50, $75, $100,000 a month for those very high-end Palisades victims. That's not the norm, but we are seeing more and more rentals early in the year that we normally wouldn't see. Now, how is that going to affect our for sale market and the supply of homes here for sale or prices? It's still too early to tell, you guys. I am essentially 1 week out from the fires occurring. Can you imagine losing your home if you have a family or work or schools, et cetera, et cetera? How do you make a decision to buy right now 1 week out? That is incredibly difficult. But as the emotions get worked through, as people start figuring out their life and their plans and how long it may take to rebuild, we may start seeing families start to think about or make offers on homes outside of the Eaton and the Palisades fire. Is it going to be in Manhattan Beach and Hermosa Beach exclusively? We don't know. Will it start to trickle down south to South Redondo, Palos Verdes, Long Beach, and beyond? We don't know yet. I don't want to speculate, but there are thousands upon thousands of households that will be looking for new housing, whether it's long-term rentals, places to buy, relocating out of state, and it's far too early to tell. But what I want you all to know is we're going to watch it and I want to report it to you. But of course, I don't want to speculate this early in the process, but know at the end of the month, at the end of the February or the first quarter, we're going to have a much bigger handle on if the rental market's still surging, is that slowing down, is it becoming a purchase market? Those things will come, and I promise to bring it to you here, right here on the Richard Haynes Real Estate Show and through my weekly blog. For now, you guys, our hearts go out to all the fire-displaced residents. I hope many of you are able to donate, whether it's items, money, or time, or of course, housing that is much needed. And again, our hearts go out to those residents that we are thinking about here and hope that homes can be rebuilt as quickly as possible. You guys, thank you for joining me. Hopefully you can reconsider your insurance after this episode, really protect yourself, and then I will be back in the coming weeks to talk to you about the updates of the early spring market and beyond. Take care of yourself, and we'll see you next time on the Richard Haynes Real Estate Show.